What up, Hyperchange? Welcome to another episode. Today we're talking about US microcap companies and why I think this niche of the market is dying. This has been on my mind for a very long time, sort of hits really close to home. I have a ton of friends in the microcap community, huge fan of the LD Micro Conference in LA. I'm in the MicroCap Club, which is a sort of club where people can present different ideas about microcap companies. We discuss different investments. Love those communities, but the bottom line is, and this is something that I feel like a lot of people in microcap are afraid to talk about or say, the industry is dying. I mean, as a whole, the amount of US publicly traded companies has been shrinking for the past couple decades. Microcaps have gotten hit particularly hard. First, a little bit of background on microcaps. A microcap stock is a company with a market capitalization of less than $300 million. This is the bucket of the smallest publicly traded stocks out there. The tiniest companies in the country are called microcaps. Some people also refer to them as penny stocks, but the more technical term is microcap companies. Why is this such an important niche of the market? First of all, investors like Warren Buffett, Peter Lynch, Ken Griffin all got their start investing in the microcap universe because this is where there's less competition, and in theory, it's easier to have an edge and outperformance. Why is that? Because larger investment funds and firms usually aren't investing in these smaller companies because they're just simply too small. Brokerages aren't covering them, so there's not much research. The daily trading volume is so low that it would take these larger firms months to actually build a position. So there's just less smart money or competition in the microcap space, which has made it the go-to way to start your career for all of these amazing investors throughout the past century almost. But now that is fundamentally changing. I believe the microcap landscape is in the worst shape that it has ever been in, and it's just really disappointing and frustrating. So let's run through some numbers real quick. So the first stat I think is interesting is that the average age of the US publicly traded company is now 20 years old versus in 1997, 2 decades ago, it was only about 12 years old. So as a whole, the companies that are trading publicly are much older than they were. Now, specifically, let's get into the universe of stocks. There was about 7,400 publicly US traded companies in 97, down to less than 3,600 in 2016, a decrease of 51%. In terms of small cap stocks, not quite microcap, but smaller companies, we've seen the universe shrink from 2,500 to 1,200, a decrease of 52%. In terms of microcap stocks, the niche we're talking about today, they have gone from 4,000 publicly traded US companies to 1,900, a decrease of 53%. So we are seeing a massive sort of washout in the landscape of US equities. Another thing I'd like to highlight, this is from a Credit Suisse report. They point out that the median age of the average US IPO prior to 2000 was around 8 years, or a little under that. Now, the average age for the median IPO in the US is about 11 years. What is this adding up to? Private companies are staying private longer, waiting to IPO until much later stage, if they even IPO at all. Why is this happening? A couple reasons. First of all, there's just been increasing regulation on public companies. They have to pay for auditors, are subject to a ton of scrutiny when they go public, and it's just very costly and burdensome and time-consuming for management teams. The second thing that's going on is venture capital firms have exploded. They've just gotten a lot better at identifying these disruptive companies and giving them capital. I mean, if you're a CEO of an incredibly fast-growing disruptive startup company, would you IPO, pay bankers millions, let them get a huge cut, be subject to huge scrutiny? It's just not as appealing versus just having 1 or 2 venture capitalists write you a huge check. They're more thinking long-term. They understand what investing in startups entails. It's just less work for you. And if the capital is so easy coming from venture capitalists, why would you ever IPO? And this is the trend of like, I have so many companies that I've witnessed dominate the landscape in the past 5 to 10 years that I would have loved to invest in, that I think are fascinating to even just see their financials, but we can't, and their venture capitalists are stealing all of the gains for what I believe is the most high quality companies in the world right now, or at least the US. I'm talking about Airbnb, Gotham Greens, Wheelies, Digital Asset, Coinbase, Robinhood, Slack, Flexport. Like, these are all products that I think are fascinating startups worth billions of dollars in many cases, disrupting entire industries that I would be dying to put my capital towards, but I just can't because all of them are venture backed. So I think the very few companies we do have that are going public at a small stage are frankly very low quality businesses, because if they were a higher quality business, they would have been already funded at a much better valuation with much less work from a good VC firm. So not only do we have the landscape of stocks shrinking, but the quality of companies that are IPOing is shrinking as well. Just anecdotally from going to microcap conferences and reading, SEC filings for microcap companies, it's astonishing to me that almost 8 or 9 out of 10 companies I see, I feel like there's no real business. The entire point of the company is to perpetually dilute shareholders, raise equity to make the executives rich, never with the goal of building a real sustainable business that you'd want to invest in. And this is why microcaps, penny stocks get such a bad rap and reputation, because there is frankly so much BS in the space and so many of the companies are low quality. So you have this combination of super low quality companies, a shrinking universe, no reason for today's most disruptive startups to go into microcap. And this has resulted in, frankly, like, I'm just not excited about any companies in the microcap space. That being said, there's definitely still ways to profit in microcap. I mean, there's special situations, there's a lot of boring little niche companies who can produce solid returns, but it's just nothing that gets me excited. So personally, I haven't owned a microcap for over a year and a half. I probably won't until there's a fundamental shift in the entire landscape. But until then, I just see the trend of microcaps sort of going like this. But I'm not going to just complain about this and be all doom and gloom, because we're hyper-changed. We got to talk about the future. Let's get excited. How is this going to change? I believe we could be at a renaissance of having the public be able to invest in the most exciting entrepreneurial ideas of tomorrow. And that is all happening due to a couple different factors. Now, there's 2 ways I see this evolving. First is that companies continue to get built the way they are built as LLCs and corporations. In this scenario, the most promising future we have for the renaissance of microcaps is a company called Carta, formerly known as eShares. Carta does something that you may think is sort of, super back office, kind of boring, which is basically cap table management. They, for some of the world's most exciting companies, Robinhood, Flexport, Slack, are all customers of Carta. And what they do is essentially put their cap tables on the platform. So for instance, Hyperchange is also a Carta customer. Like you can go to log into the Carta platform, see all the shares that people own in your company, issue new shares to people, raise funding all through the platform. It's basically a software as a service product for cap table management. Why could this evolve into being the renaissance of microcaps? Because in the long term, Carta is building the foundation to be a platform for liquidity for these startups, essentially a NASDAQ or New York Stock Exchange competitor. Eventually, it won't just be me issuing shares to employees via Carta, but there could be a marketplace launched on Carta where investors could sign up and start to invest in the companies on their platform. This means, in theory, you may never have to go through the traditional IPO process. The company could just list their shares and do everything through Carta. Carta is a super early stage company. I believe they're valued at a couple $100 million, but they have some incredibly big name investors, namely Chamath Palihapitiya, I think I'm saying that right, from Social Capital. Just the tier of companies that are joining them, I believe they have an incredible product. I don't know if Carta will be the company to create one of these sort of NASDAQ-esque exchanges for private company stock, but I think that could unlock tremendous value is if there's a new way for companies to be able to list their shares to the public without the traditional IPO process. That could be a renaissance of microcap stocks. The other way that I see the industry evolving, scenario number 2, which is crypto assets. I believe that we are starting to see some of the most exciting project companies, organizations, call them what you will, not be built as LLCs anymore, but be built as crypto assets. Not just Bitcoin, not just Ethereum, but things like MakerDAO, where there's sort of a token that is basically representative and ownership of a company or open source project. And I believe this could be the new way that organizations are built in the future. If this is the case, then we may already be seeing the democratization of opportunities and microcap renaissance, because anybody can invest in these tokenized projects. For instance, MakerDAO, which is a project that I'm invested in, is launching this thing called DAI, which is a stable coin pegged to the value of the US dollar, the first real cryptocurrency without volatility. And I own something called Maker, which is the governance token, which in theory would capture the upside if their main stablecoin takes off. And what's so interesting about this is Andreessen Horowitz, one of my favorite VC firms, invested in MakerDAO around the same time that I did, and I own the same asset that they're invested in. Why is this such a huge deal? Because think about the other companies that Andreessen Horowitz is investing in. Coinbase, Airbnb, BuzzFeed, I don't know, you name it. If there's a hot startup, Andreessen Horowitz has probably invested in it. They're one of the top tier VC firms. And now they're starting to invest in crypto asset projects. And because there's none of like the chains of legacy financial institutions where I can't invest in their VC fund, I have no access to their private employee stock. Unlike that with crypto assets, it's open. Anybody can buy tokens in these projects. Anyway, these are my thoughts on microcaps. I believe it's really tragic to see that the industry is dying, but I think there's a light at the end of the tunnel, whether it's an exchange coming out like Carta to, disrupt and compete with NASDAQ. Maybe even NASDAQ or New York Stock Exchange will somehow make it a lot easier to list and reduce the burdensome requirements of going public, or whether it's that crypto assets take off and go mainstream, and that's how companies are built and everybody can invest at them, whenever they want to, there's no restrictions. I think these are really, really promising ways that the public is going to be able to start getting access to the world's most entrepreneurial projects at an early stage. Why is this important? It's no secret that the wealth gap in our country continues to diverge. The rich get richer, the poor people are getting poorer. And I think this entire situation where the most exciting companies are uninvestable because venture capitalists are capturing all of the gains is really, really frustrating, because who's invested in these VC funds? Super old money people with millions and millions of dollars of net worth, and they are reaping all the rewards of all of these startups. And it's not like I'm not analyzing and knowing the startups that are going to take off. I literally just have my hands tied and can't invest in them. If we can get a fundamental sort of break open moment with a renaissance of microcaps or startups, let's call them what they are, and allow the public to invest in them, that will be such an incredibly democratizing moment for the financial system. I think we're on the cusp of that happening, but for now, the trend is that microcaps are dying. So I want to make this video to highlight and just bring attention to this fact and say, guys, we are there could be this epic moment where the entire universe pivots and the opportunities start to go like this, and there's so many exciting projects to analyze and invest in, and it gets people excited about being a part of these endeavors. I don't know. So I'm pretty passionate about this because I got my start investing in microcap stock. I have so many connections and people that I really respect in the microcap space. So it just kills me to see it sort of dying. So that's why I want to make this video, to raise awareness for what the future of microcaps will look like and really just start a discussion. Let me know what you guys think. If you like Hyperchange and you want to support, please check out our Patreon page. Anyway, I'll see you guys next time. Peace.